Thank you for joining me on this video. My name is Rodney Constable. I'm the president of Simple Market Signals, and today we will be doing technical analysis on the S&P 500 for Thursday, February 20th, 2020. Markets closed just a few minutes ago, and what we're looking at here is a 1 minute, 1 day chart where each candlestick represents 1 minute of trading in the S&P 500. And as you can see here, guys, we had a pretty volatile day intraday. You wouldn't know it by where we closed. We only closed down 0.38%, so 38/100ths of 1% to the downside after closing at an all-time high yesterday. And we also closed above this all-important, at least in the short term, 3370 level, which we will look at again on the next chart. But you can see here we opened around that 3380 level, which has been acting as overhead resistance. Again, I'll show you that on another chart. And we actually got positive here for the first part of the morning. And then at 11 o'clock, the markets really kind of cracked here, and we fell really for half an hour, and then bottomed right here at 11:30, and then started climbing our way back out and closed at 3373.23. Again, down a little less than 0.4%. But I just wanted you to see this and see how volatile it was between 11 and 11:30, and really, get you to understand what happened during the middle of the day. So in this chart, we're looking at a 5-day, 5-minute chart. So this is the last 5 trading days of the S&P 500, and each candlestick represents 5 minutes of trading. And you can see here, again, that the lines that I've already annotated for us, 3370 has been acting as a support level. We gapped over yesterday. We gapped up and traded and closed above the 3380 level, which had been acting for the last week and a half as overhead resistance, but it didn't hold. So the good news is we're still above the 3370 level. So it just shows the importance and the resilience of this market, even though we can get this kind of intraday move. What matters is where we close. So that's why I always wait until the end of the day to do these charts for you. I see other guys doing this stuff in the middle of the day, but as you can see, if I'd have made this chart here, it wouldn't have told the whole story, the real story. So what really matters is where we closed. The good news is we closed above this 3370 level. So the 3370 level on the S&P 500 is still our short-term support level. Now, let's pull back and look at a 1-year chart where each candle now represents 1 day of trading in the S&P 500. And we already know that the 3370 level in the short term is our support level. So hopefully that will hold. The next level of support will be found around this 3320 level, which incidentally kind of lines up very nicely right now with the 20-day moving average, which is this green line here. And so there's 2 reasons why that 3320 level will come into play if the 3370 level doesn't hold. Now, just beneath this, of course, is the blue line, which is the 50-day moving average. And right now the 50 is setting at 3269.97, so right around the 3270 mark. So if the 20-day moving average and that 3320 level doesn't hold, of course, we would probably pull down back to the 50. The other thing I wanted to make sure I pointed out here is, look at how long we've been above this 50-day moving average, guys. This is so far, it's a 19-week rally above the 50-day moving average. So yesterday, before I made yesterday's video, I went out and did some research, and I went clear back to 2007. I could have went further, but I thought 13 years or so of data was probably enough. And what I found is that this is since 2007, since the beginning of 2007, this 19-week rally we've had above the 50-day moving average in the S&P 500 is the second longest rally of its type since the beginning of 2007. The only rally I found that was longer than that was back in 2013, which you may remember. 2013 was a pretty stellar year in the markets, where we had a 24.5-week rally where we stayed above the 50-day moving average. So as you can see here, we got above the 50-day moving average the first part of October, and we haven't even really touched it. We kind of came close right here when the coronavirus news came out. We pulled back kind of towards the 50-day moving average and kind of tested this 3220 level, which we will talk about in another chart. but never broke the 50, and we've been above it. Went right back above this 20 and been above it since. So it's been an incredibly resilient rally, and I think it is getting long in the tooth, but as long as we continue to close above 33.70, at least in the short term, there's not much to worry about. Now, this 32.20 level is, in my estimation, the most important support level we have. So we do want to stay, even if we get a pullback, below the 50, we definitely want to stay above that 32.20 level. But I'll spend a little bit more time on that here in the next chart. So 32.20, and then the next level of support would come in at 3100. You can see that 3100 back in the middle of November of 2019 acted as overhead resistance. But once we got above it, we've stayed above it all but one day. So prior resistance becomes support once penetrated, and we traded one day in this, since the middle of November, we've traded one day below the 3100 level. So again, this is a very important level. And also, as a reminder, round numbers like 3100 and 3000 act as psychological support and resistance levels. So whether it's technical or psychological, round numbers, and sometimes both, but round numbers do come into play, and they do act as support and resistance levels quite often. Now, you can see if the 3100 level doesn't hold, this gold blue line is our 200-day moving average, which right now, as you can see, is setting really close to 3040 on the S&P 500. And then, so if 3100 doesn't hold, then we would pull down probably right at this 200 and maybe the 3020 level, which you can see there's quite a bit of support right around this 3020 level going clear back to the summer of 2019. And then again, as I indicated, this 3000 level. So if the 200-day moving average doesn't hold and we do pull slightly below that, we could probably see ourselves somewhere in this 3000 level. But let's keep our fingers crossed that we don't see that anytime soon. A pullback to the 200-day moving average right now would be an 11% pullback. So we are running 11%, right? Almost exactly 11% above the 200-day moving average, which, by the way, it's not completely unusual. However, that's a pretty big gap between where we're at, where we close today, and the 200-day moving average. So just another reason that if you do have profits, that you've made over the last 4 months in this very nice run where the market has been up quite a bit, it may not be a bad idea to take some profits here and cash in some chips, as they say. But again, as long as 3370 continues to hold, we're in good shape. Now, in this chart, what we're looking at, this is a 3-month chart, and again, it's a daily chart, so each candlestick represents 1 day of trading in the S&P 500, but I've just kind of focused and I've zoomed in to the last 3 months of trading to allow you to really see the importance of this 3220 level in the S&P 500. On December 20th, we had a high volume spike, which is extremely important. So high volume up days and down days are very important. Volume matters. Conversely, if you get a low volume down day or a low volume up day, it doesn't matter as much. So volume does matter. And you can see here that on December 20th, we had a high volume up day, cleared this 3220 level, and we have not had one close in the S&P 500 since we hit that number, right? Since December 20th, we have not closed once. We dipped intraday below the 3220 level a few times here, but we have not closed beneath 3220 on the S&P 500 for 2 months now, so since December 20th. So again, this is a super important support and resistance level. So in the event that we take out the 3370 and fall down beneath, the 20-day and the 50-day moving average, this 3220 level really needs to hold. If it doesn't, we might find ourselves going back towards that 3100 or even the 3000 level on the S&P 500. I hope you've enjoyed today's technical analysis of the S&P 500. If you haven't already done so, please subscribe to my YouTube channel. Share this channel with your friends and family. Give me a thumbs up on this video. Check out my other videos. I have a lot of very educational videos on my YouTube channel, and I look forward to seeing you in the next video.